Two things happened that most people in crypto did not connect to each other. The first, JPMorgan, MasterCard, Ondo Finance, and Ripple completed a cross-border tokenized US Treasury transaction on the XRP ledger, around $250 million in assets. Settlement time, 4.2 seconds. The second, the United States government has an executive order establishing a strategic Bitcoin reserve. The White House called it a digital Fort Knox. Governments are holding Bitcoin as a reserve asset. Two assets, two completely different jobs, two completely different adoption stories, both happening right now. The question I want to answer in this video is which one from current prices has more asymmetric upside for a holder who understands what they're actually buying? I'm going to make the honest case for both because the debate in this space is usually tribal and the data deserves better than that. None of this is financial advice, so always do your own research. Welcome back to the channel. By the way, if you're new here, my name is Rory. I'm from the UK and I've been trading crypto and Forex since 2020. In that time, the crypto market has given me a full-time income, a serious property portfolio, and the freedom to live life completely on my own terms. I'm talking genuine freedom. White sand beaches in Asia, safari in Africa, the skyscrapers of New York, the Mediterranean coast, Australia. And I'm not talking holidays, I'm talking months at a time, living it. Everything I've built from the crypto market. No office, no boss, no 9 to 5, just the right knowledge and the freedom to go wherever I want, whenever I want. Now, if that's a life you're working towards, you're in exactly the right place. Hit subscribe and come along for the ride. If you're going to become the first millionaire in your family tree, confirm it with an amen in the comments. And we're teaching our 2026 altcoin trading strategies and giving you our crypto passive income briefing when you follow us on Instagram at Bullrunners. Our official account link will be in the description of this YouTube video. Now, let's get into this. Now, let's start with Bitcoin, and let's be completely straight about it. Bitcoin is the first genuinely scarce digital asset in human history. 21 million coins written into code, cannot be changed. In a world where governments print money and debase currencies, an asset with a mathematically fixed supply is an extraordinarily powerful thing to own. Bitcoin has won the savings asset argument. The US has a strategic Bitcoin reserve, described as a digital Fort Knox. Pension funds, endowments, and registered investment advisors are buying Bitcoin through regulated ETFs. $120 billion in ETF assets under management. Governments and institutions are treating Bitcoin the way they once treated gold. That argument is over and Bitcoin won. David Bailey, Nakamoto chairman and one of the most experienced Bitcoin investors alive, put the entire Bitcoin thesis on Bloomberg early this year.
I think you have to zoom out and ask the bigger question of why has Bitcoin performed so well for the past 15 years? I think it's because people want a form of value, a form of money that is isolated and insulated from our political system. Bitcoin is math-based money, and if I'm a long-term value investor, I look at today's Bitcoin price and I see something that's a great value rather than something that's distressed. I think what this pullback in the price is really highlighting is Bitcoin's biggest strength. That when there is a crisis in Bitcoin or there's poor market performance, there's no Federal Reserve to step in. There's no backstop for the market. The only thing that backs the Bitcoin price is investors willing to step up and buy. And so there's a free market here that I think is fundamentally different than any other market in the world.
Math-based money, no Federal Reserve backstop. The only thing that sets the price is buyers willing to step up, and his next line sums up the entire Bitcoin thesis in 7 words.
But from my perspective, when I look at what other assets can we comp Bitcoin against, Bitcoin is really, it's gold for the next generation. It's gold for the young investor. And when you look at what's happened in the price of gold over the past year, it's gone up dramatically. For Bitcoin to reach parity with gold, you would need something like a $2 million Bitcoin price. So I think there is a lot of upside in the underlying value proposition of Bitcoin. I think if you look at it comparable to any other asset, it's become a better value. And I can tell you, like for me and for investors who have been around in this industry for a decade plus, we're buying Bitcoin and we're eager to buy it.
Gold for the next generation. Strong thesis. Governments are buying it. Institutions hold it. The US Strategic Bitcoin Reserve exists. $120 billion in ETF assets. The question is not whether Bitcoin is valuable. The question is whether it's already won so completely that the most of the institutional upside is already in the price. Now, let us talk about what XRP has actually won. Because while Bitcoin was winning the savings asset argument, XRP has been winning a completely different argument. And most people have not been paying close enough attention to notice. XRP was built for one job: moving money across borders fast, cheap, and at institutional scale. An XRP transaction settles in 3 to 5 seconds. Bitcoin takes 10 minutes on average. An XRP transaction settles in 3 to 5 seconds. Bitcoin takes 10 minutes on average. An XRP transaction costs a fraction of a cent. Bitcoin fees can reach $15 in periods of high demand. The XRP ledger processes around 1,500 transactions per second. Bitcoin processes around 7. The institutions that matter are using it. In May 2026, JPMorgan, MasterCard, Ondo Finance, and Ripple completed a cross-border tokenized US Treasury transaction on the XRP ledger in 4.2 seconds. The DTCC, which clears most of the trades in the US financial system and holds $100 trillion of assets, has accepted Ripple Prime into its working group alongside Goldman Sachs, JPMorgan, and BlackRock. Singapore's central bank is testing RLUSD on the XRP ledger. Bitcoin has $120 billion in ETF assets. XRP has $1.44 billion in cumulative inflows. That gap is exactly where XRP is in its institutional adoption journey relative to Bitcoin, and that gap is where the asymmetric upside lives. Bloomberg's James Seifert, who tracks Bitcoin ETF flows more closely than almost anyone in traditional finance, put the Bitcoin gold narrative in its proper context.
Maybe a little bit, but probably not. I guess my argument would be if you look at the underlying characteristics of what Bitcoin is and what it's trying to be, it meets a lot of the characteristics of digital gold. It even does plenty of things better than gold itself, as far as like when it comes to moving the asset around the world and things along those lines. Divisibility, I could go on, right? But the one thing it's not doing well is that it's not as stable as gold is, and it's not performing as well, nearly as well as gold over the last year. But you go back a few more years and the comparison becomes a lot closer.
Bitcoin has gold characteristics, but the market still partly trades it as a risk asset correlated to software stocks. That means Bitcoin and XRP are not competing for the same institutional dollar. They serve different functions, and then the DTCC CEO said a case for why XRP's function matters at the highest possible level.
If we can move assets instantaneously and move cash instantaneously, it reduces counterparty risk, which for the industry, especially the numbers that we're talking about, is enormous. And as you know, the U.S. capital markets is big. As the world economy grows, wealth grows. As wealth grows, capital markets grow. So capital markets will continue to grow, and that risk will continue to grow. And we think blockchain is a really good solution to help mitigate that risk.
The DTCC settles $100 trillion of assets. Their CEO says blockchain is the right infrastructure for settlement. That is the most powerful institutional endorsement of the infrastructure XRP runs on. Now, this is exactly where most people get it wrong. They understand the thesis, they see the data, they believe in XRP, and then they have no structured plan for what to do next. Understanding what is coming is not the same as being positioned for it. Knowing how to size into a falling market, when to add, how to manage risk while you wait for the catalyst, that is the work that separates the investors who capture the move from the ones who watch it happen. Our team does that work with serious XRP investors, one-on-one, 5 months, a coach who looks at your actual positions and your actual plan. We're genuinely changing the lives of the people inside it. There's a free training in the description. If it resonates, book a strategy call with an expert on our team. This can genuinely change your life, but only if you move before the catalyst does. So let me answer the question in the title. If you were looking for a savings asset, a hard money hedge against currency debasement, something governments hold in reserve and pension funds buy through regulated ETFs, Bitcoin is the answer. It's won that argument. The $120 billion in ETF assets is real. The strategic Bitcoin reserve exists. Bitcoin's adoption story is already well advanced, but if you're looking for asymmetric upside from current prices, the asset whose institutional adoption story is the least priced in, where the DTCC working group is not yet live, the Clarity Act has not yet passed, the banks have not yet deployed XRP for settlement at scale, that is XRP $1.44 billion in ETF inflows against $120 billion for Bitcoin. That gap is where the upside lives. Standard Chartered has an $8 price target for XRP by year end. If the Clarity Act passes and ETF inflows hit $10 billion, that is their research desk number, not mine. I'm not guaranteeing any outcome, but the gap between what XRP is doing right now at the institutional level and what the current price reflects is one of the widest I've seen for any asset in this cycle. Bitcoin has won the savings asset argument. XRP is still winning the utility argument. One of those arguments still has most of its institutional upside in front of it. I know which one I think that is, and I'm flagging it clearly as my opinion. And the investors who capture that move will be the ones who have the structure in place before it happened, not the ones who understood the thesis and then tried to react after the price already moved. Our team at Altcoin Pro works with serious XRP investors, one-on-one for 5 months, with a coach who looks at your actual positions and your actual plan. We're genuinely changing the lives of the people inside it. There's a free training in the description, and if it lands, book a strategy call with an expert on our team. This can genuinely change your life, but only if you move before the catalyst does. Bitcoin is gold for the next generation. It's won that argument completely. Governments hold it. $120 billion of institutional capital is behind it, and the US has a strategic Bitcoin reserve. XRP is the settlement layer for the next generation of global finance. JPMorgan settled $250 million on the XRP ledger in 4.2 seconds. The DTCC has Ripple Prime in the working group. Singapore's central bank is testing RLUSD on it. XRP is sitting at $1.20. Both are real, both are legitimate, but only one has most of its institutional adoption story still in front of it. See you at the top. Stay bullish.